December the 1st, 2025, 6:55 p.m. Monday evening. Let's talk. First things first. I'm not a financial advisor. Nothing in this presentation is financial advice. Cryptocurrency, stocks, bonds, ETFs, ETNs. These things can be highly volatile, even though some traders love the volatility, like me. You could lose all of the money you invest. You should always do your own research and consult a qualified professional, like a qualified licensed professional. Your investments are your sole responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I nor the platforms containing this presentation for your review are liable for any losses. This video is strictly for entertainment and leaning heavily towards the educational purposes side only. First things first. Let's look at Tradingview. I don't like using it from the website because I haven't found a way to adjust the fonts and all these other things that come with the chart. So I download the application. Now I'm currently on a Windows-based computer. So in the Windows store, there is a Tradingview app. And that is what I will pull up temporarily here. Okay. Now, you need an account with Tradingview. So I'm going to click here because you can see I'm logged in. And let's go profile. I think it's profile. And this is going to show you, I believe, the tiers. Now, the tiers allow you access and privileges to certain things. I'm not going to necessarily pay for a tier if I'm not getting value out of the tier. You can see I have the premium plan. I'm following 3. I don't have any scripts for sale. You can have scripts and people can pay you for the scripts. It's a whole different story. Premium. I'm going to click premium. And now the tiers should come up just in case you want to upgrade or downgrade. You get a website across the top of the screen, but you may need to first log in. Now, can you have an account without paying a subscription? I'm not sure. There are some offers that we can see there. Cyber Monday, the greatest deal of the year. Yada, 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 blah, blah, blah. No affiliation, even though on my YouTube page, if you come under my name, you may possibly get a discount. I'm not too sure because my YouTube page is going to show the link for Tradingview. This is the annual plan. Paid all at one time, billed every year, you're saving $120. That's the current plan that I'm on. There's a $24.95 if you pay all at one time and a $12.95. But no, I don't have all that money like that. And I have to see if I like what I'm getting. So monthly it is. I pay more, but it is what it is. All right. I'm looking at the number of indicators. If you want to start out, just so you can get your feet wet, you can view up to 5 indicators at one time. And a lot of my indicators are, of course, homemade. I'm utilizing my skill set in computer programming and networking administration. I have a degree in that. You have 10 indicators you can see per this chart. And I like this one here. I do have the premium plan. So I'm surprised that showed there. I am signed in. So, of course, if I wanted to pay annually, they say, oh, it's your current plan already. So, all right. So I like it because you get to see a number of indicators at one time. Okay. And when we look at the chart, I'm going to start from 0. I like this as my personal secretary. My phone does not go off. It will ring if I have the ringer on loud enough, I'll hear it. But my phone is going to notify me about anything on the chart. Someone can text me and I'll get a text message notification. but I have no other notifications that I get except coming through when an email comes through from Tradingview. So my phone rings, I may or may not hear it. Someone sends me a text message, I will possibly get a notification. And when Tradingview sends me an alert, I get an email notification. So when my phone goes off, it draws a signal in my chart. Either it's ringing, someone's texting me, or something is going on with the chart. I've canceled all other notifications that I can think of. And so you see these alerts here regarding price. If the price goes to a certain point, up or down, I'll get a price alert, or I'll get 400 technical alerts. This is like me having eyes in the chart connected to my phone on my pocket. Or if it's ringing, I don't really put the phone in my pocket like that. All right, and so you can see your personal secretary here for this plan will give you at least 200 alerts, and this one will give you 40. So whichever one you want to learn with. And eventually, when you start learning, then you should be trading so that it pays for itself, whichever plan you use. All right. I usually look at one chart at a time. You can split your screen to look at 2 charts at a time with all your indicators present, 4 charts here, 8 charts here. I usually have 2 monitors going. Okay, one on widescreen TV because I like to see everything, and I hardly don't watch TV or anything not related to financial news or blockchain. I'm not usually watching it unless I indulge in a movie every now and then. Other than that, I'm meditating, and my geeky nerded self, my geeky nerded persona is in the chart. All right. So you need one of these in order to appreciate and look at the indicators. You're going to learn really fast. All right. So again, I downloaded the app, but I did all of this first on the website. Okay. All right. I'm going to get rid of that and close a lot of windows because my laptop isn't the best. The computer does the purpose of what I want it to do. And that's about it. I'll use what I have. Okay. All right, so let's get rid of that. And I like the layout. I could maximize the screen, but I can't control the font and I can't see everything. So I'm going to close out this window. And we're going to look at some beautiful indicators here. I'm going to take you from the ground up on some of these indicators so that you have a better logic of jumping in and out of the trades. And hopefully, when your attention and focus is getting into the charts and looking at the chart, you'll increase your trading knowledge base and your financial IQ. So we got some drills we're going to be looking at. I call it cadence. And we're going to be looking at some of the indicators here over time. May not be in one session, but time's going to go by really fast for me. When so many people are getting laid off, I always wanted to build something where I didn't have to rely on someone else calling people or getting customers. I'm introvert. My brain don't work that way. That doesn't make sense for me. I don't want to depend on someone else for anything. And so this is why I depended on the good Lord Almighty and the Holy Spirit within me. And lots of meditation and time in the chart. I'd like to say, to a certain extent, I'm self-taught. All right. And I have built beautiful indicators so that I can pass that information on as far as the lesson. Into the chart we go. Once you have an account with Tradingview, you can see I have some indicators built onto my chart. I'm under the microscopic view. We're looking at ZBCN. This ribbon right here is where you can load your watch list. I'm going to click on that, and it's going to expand, and I've loaded a lot of assets in here that I enjoy looking at. So out of possibly, I don't know how many there are, thousands of assets, how many cryptocurrencies there are, maybe 14,000 plus. So maybe the top 15 to 20 are of interest. But either way, you can see Bitcoin, some other things in here, Bitcoin dominance, Tether, USDT, and so many other things. Right now, we're on ZBC, and a cryptocurrency out of South Korea that is heavily associated with XRP ISO 20022. Wanted to go here because we're talking about the cream of the crop. November. A lot of ETFs are approved or have been getting approved this November, right? And so you can see some important things are going on. Bitcoin ETFs, yeah, most people missed it. Ethereum ETFs, yeah, most people missed it. You don't want to miss XRP. XRP ETFs are live. They're constantly being approved and put on the New York Stock Exchange, if that's what you want to call it. These spot ETFs means these companies, organizations, hedge funds, whatever you want to call it, are acquiring the XRP token. And so they have an ETF, which means they invest in XRP. Their interest is acquiring the token to back their ETF, their spot ETF. So just like Bitcoin and their ETFs back in the day, Ethereum and their ETFs, now you got some ETFs coming on because President Donald Trump wants to make the United States the crypto capital of the world. And it makes sense with the SWIFT system handling at least $5 to $12 trillion a day to be upgraded out with the old legacy MT system, a way of doing things, which had a 6% error rate. Now think of 6% and that 5 to $12 trillion multiplied by 6%. All that money gone, disappeared, delayed. And remember the Department of Government Efficiency earlier in the year, finding the horrible places where the money was going if they found out. So now blockchain in the name of rich text formatting ISO 20022 are the cryptocurrencies of great interest, because in November, around the 22nd, full Swift ISO 20022 adoption. The messaging system is clear. If the check is being sent somewhere, now all the information of who got it, what it was spent on, what the check is made for, all that important information is now backing the SWIFT system. And around the 1st or in November, quantitative tightening ended. And that word you never hear anymore, printing, quantitative easing begins. So anytime the government prints more money, and they've always done that, certain assets increase in price, such as gold, silver, precious metals, cryptocurrencies, all those commodities. It was running away. And we can remember the history of it. Gas prices, egg prices, energy, until President Donald Trump got in office to start turning this monstrous direction we were going to around. Liberalism and DEI, people in spots didn't know what they were doing because the government said you got to diversify. Now, everyone's got an opinion, but I'm simply looking at the information and understanding the trend of what's going on. And no matter what happens, knowledge is increased. And you got to have it. And I built that into the chart so that if I was the one laid off, then I could not depend on anyone to sustain myself, because the Holy Spirit in me is true to me. All right, so let's look into the chart, but understand $5 to $12 trillion. Blockchain is going to have that. So you have some legislation in the works called the Genius Act and the Clarity Act, which is coming to help implement blockchain and stable coins, by which they want to stabilize the U.S. Treasury bond market. Because if China dumps, Russia dumps, then what's going to happen with our currency? No one's going to want to buy. So Trump single-handedly is stabilizing the bond market so that if countries start dumping the dollar because they want to attack us, not necessarily with missiles and bombs, but from within. Kamala Harris would have been in the White House. Hillary Clinton would have been in the White House. They would not have let the country survive with terrorists. They would have taxed you and I into poverty. But after 400 years, according to God's promises in Genesis chapter 15, verses 13 through 15, the Mayflower Compact, and the time and the season we're in, we have to look at the truth and transparency to the system so that taxpayer dollars and what God has promised to the nation becomes relevant. So let's start from scratch and understand we're in a very unique season with ISO 20022 blockchain cryptocurrencies. It's coming. And this is why we look at so many cryptocurrencies, namely XRP. You need an account with Tradingview so that you can see my indicators. And again, I've downloaded the app. And with my scripts and my software, we're not scratching a lottery ticket here. To me, personally, this is the 30, the 60, and the 100-fold God has promised me. So based on you not necessarily using emotions, but trading on some really, really highly technical indicators here, you can make yourself better so that you can understand what's in the chart. And we're going to start with Tradingview. You get an account, you don't have any indicators loaded on there. You just have red and green bars. Red and green bars on a 10-second chart. Let's go to a 1-hour chart. That way we get some fullness in the bars. Let's auto adjust this. You're learning how to use the app as we go. I'm trying to go slow. And let's remove the assets that I wanted to see, because I can click on any asset. Right now we're looking at ZBCN, a cryptocurrency out of North Korea. You need to make sure, because this is the coach's playbook, right? Even though I am online, I'm accessing the internet, no one gets to see the coach's playbook. Coach is running the plays. Right now it's just a blank piece of paper, even though some people just trade on the signals and the patterns of the red and green candles. Red means on the 1-hour chart, the price is overall down. So red, we measure from the bottom of the body of the candle. Green, in the next hour, the price has been going up. There's a wick there. I'm going to set the cursor aside. You see the wick? So the price got as high as the top of the wick, but before the hour ended, it stabilized here. Then we went into the next hour. We started here. The price went down and then sort of ended here overall, but it's measured from the bottom of the body of the candle, the red candle. All right, a lot can happen in 1 hour. So red candles are measured from the bottom of the body of the candle, and green candles are measured from the top, because that's how the price ended. What you're looking at is history. Currently, we're on this hour candle, the 7 o'clock p.m. If you look at the vertical line, you see the date and the time, 7 o'clock p.m. And the next candle finishes at 7:59, and the new candle comes in at 8 o'clock p.m. because every candle represents an hour. All right, so you get it. You get it. So here, The price got as high as here. So from here to here, the price went down, which would have made it a red candle, but then it was going up, green. Ended there. All right. And since we're on the 1 hour candle, let's just measure a percentage. This looks like a nice one here from the bottom of the red. And if you would have been attentive in the chart at the moment and caught the top, 6.42%, 2 hours. Now, I know what a lot of people are saying, but let's take $1,000 tied up for 2 hours. 1,000, let's take $10,000. 10,000 multiplied by 6.42%, that's $642 in 2 hours. How about $5,000? All right, so $3,021. $321. Okay. If you catch my errors or my mistakes, it's because I got a lot going on in my head at the same time. I know what I'm saying, but sometimes the words don't come out right. Okay. All right. So hopefully you're catching my mistakes and you're realizing what I'm saying. This is big. Now, my job when I come to the chart is to find 1%, specifically 1.65. But this is the coach's playbook. Robinhood is only going to charge me 0.65% on the buy and the sell of the trade. Beautiful. But not all the cryptocurrencies are on Robinhood. So Robinhood has about 19 cryptocurrencies that are on there. But we're using this as a method of learning the chart layout. And because on the 10-second chart, we will get clean signals. So you understand the red and the green candles so far. Now, if I was just trading on the red and green candles, I don't have a lot of information. I'm trading in the wind. I'm gambling. So the first thing I want to do is show a trend to see what trend I'm in. So now I'm going to click on this one. Percy Simple Moving Average Cross Momentum Color Candlesticks. It's in reference to the 1 and the 3 and the 2 and the 6. I'm going to unhide that. You're going to see the candles, whether red or green, and you're going to see them painted yellow for a downtrend and blue for an uptrend. It's one of the first things we need to see. And we need to see this because, let's move to a 5-minute chart. Because these candles, you know, are truly green and red, even though they're yellow and blue right now. I can still look at the outer border of this yellow. I see green. That's a green candle, which means the price ended at the top of the candle. This is a green candle because it's blue, but I see a green border with a green wick. Green, green, red. This is a red candle. I see, even though it's blue, I see a red border with red wicks. We call them wicks, like candles have wicks. It's a green candle. This is green, 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 red. So we don't want to necessarily get into trade and then get out by just trading the color of the candle itself. Why not stay in the trend for more gains? So this is showing you a trend. Even though this is relatively flat up in here, you at least see the trend that you're in. All right. And sometimes the moves are really nice. Now, when you're trading an asset, you're trading because there is something that you see in the value of the asset for a certain amount of time. Like XRP, part of the new financial system, possibly the future Bitcoin. Wouldn't you have liked to invest in the Bluetooth protocol before it start getting in all of the cell phones and the stereo speakers and so many electronic devices such as laptops and TVs, so many other devices to name? Wouldn't you have liked to invest in the internet protocol before all these web pages were being made and So many, I mean, look how widely it's used. But this is the backbone of the financial system. This is the moving money protocol. This is ISO 20022 blockchain. So those are the ones you want to store. But just like a bank can go under or sink or get hacked or blackout, we like to say if you don't have the keys to your car, then someone who finds the keys can take your car and you won't even know. So even though we got the coach's playbook and we're learning coach's playbook in Tradingview, whatever tier you're on, that's one indicator that I think is very valuable because it shows you where you are and it simplifies things a little bit as far as the uptrend and the downtrend. But guess what? We always need more information, but I think a lot of people can appreciate that. There was one person selling his software for at least $1,800 just to show the trend. The 2 and the 6, in my opinion, is the best trend because it is a fast mover. Now, I want to show you what paints my trend here. And that's the 2 and the 6. I'm going to show you that. You'll see a series of red and green come across the screen. Let's open up this so you can see. Green paints the candles from yellow to blue, indicating an upward trajectory. Red, and we're talking about the large triangles pointing down, red paints the candles from blue to yellow, indicating a downward trajectory until your next green comes in. And this is the 2 and the 6. See that 2 and the 6 lit up right there? 2 and the 6 is a moving average. There would usually be lines in here. So I love the lines, and I've shown that in the wind channels, and I'll explain that. But the lines are taken away so that you can appreciate the trend, and I've substituted the crosses with the red death cross and the green golden cross triangles. The smaller triangles simply means they're occurring on faster moving charts faster than 5 minutes, like a 4-minute chart, a 3-minute chart, a 2-minute chart, and everything faster than that. Okay, that's what the small triangles mean. They're like an early warning system that says, hey, this thing can happen on this time frame that we're currently on. That's what the big triangles mean. But you can appreciate when your golden cross of the 2 and the 6 comes in, and you can appreciate when the death cross comes in. Now, how valuable are those two pieces of information? The visual. So you're not in here and then out here. Then you got to take another trade here. Then you're out right there. You got to take another trade here and out right there. On the same asset, you can only buy and sell 3 times on the same asset within the 5-day period. Only 3. And this is a 5-minute chart. If you buy and sell and buy and sell and buy and sell, that 4th time on most cryptocurrency exchanges will flag your account. So you have to have a account with Tradingview and choose a tier. And this is 2 indicators we're looking at so far, valuable pieces of information. It's not just when the thing is going up, but when it's about to reverse. Because you have to get into the habit of buying low and selling high. Buying low and selling high. Now, the higher the time frame, the bigger the percentages gained. The lower the time frame, you're not going to get too much. But we have fast moving charts because we need to see things happen quickly, and the same thing that occurs on a 10-second chart is the same thing that occurs on a 5-minute chart. Right now we're in a 5-minute chart. Every bar represents 5 minutes. The future has to happen. The past is evident for us to see. All right. Now, the 2 and the 6, death cross, red, and golden cross, green, has a lingering effect in most places in the chart. Red, more than one candle is affected. Green, usually more than one candle is affected, unless it's just back to back, and you're riding flat. Okay. but we like the 2 and the 6. But we need something to give us forewarning of when the red is about to come in or the green is about to come in. Not just the early warning system. Sometimes you get it, sometimes you don't. But notice it's counting cadence. If I got no internet lag, if I got no processing power lag or computer messing up, then it's like saying red, green, red, green, red, green, red, green, red, green, left, right, left, right. You know what comes next, don't you? What comes after green? Red. So this is valuable information. I'm going to give you some more information. If we take the fraction 2 over 6 and cut it in half, what do you get? 1 over 3. The 1 over 3 is the mouse. The 2 over the 6 is the cat. The mouse is really fast and it turns corners on a dime. It can zigzag, and the cat, which is faster if it runs in a straight line, can definitely outrun the mouse. But in order for the cat to turn, it takes more time than the mouse. So 2 over 6 is a heavier weight than 1 over 3. So the 1 over 3 can usher and trigger the 2 and the 6. If the 1 and the 3 turns left, you know the cat wants to follow it as best as it can. It's going to turn left too. So if the 1 and the 3 turns right, if the mouse turns right, you know the cat wants to follow the mouse. So you know that the 2 and the 6 candle alone is a red candle. Look, it's pointing down. It's a green candle. Look, it's pointing up. But if it's red and you get no interference, then you're going to have red and green candles in the trend of moving down until you get your golden cross. Let's put on the 1 and the 3 golden cross and death cross. The 1 and the 3 simple moving average can usher in the 2 and the 6. So now, here's the blue and the yellow, which is the 1 and the 3. Now keep in mind, sometimes the cat is right on top of the mouse. I know my blue color looks like this. But if it looks solid, then there is a green underneath the blue. Look right here, and I'm going to take the blue away. But there's a green underneath the blue. Yellow and blue away, there's green, right? All right. So now, since we notice it's green, and we're in an uptrend, because green, golden cross, green paints the candles from blue to from yellow to blue for uptrend, then there's a yellow that could bring in the red. It didn't right there. There's a blue bounce up, feeding off of the green underneath the blue. There's the yellow that could bring in the red. Not yet. There's a blue, bump up a little more, until eventually you get the yellow to usher in the red, and when it prints, now it's official. So that could have been a good ride up, and you would have a forewarning or a precursor. Now, what do you notice about this when I take the 2 and the 6 away and just leave the mouse? Well, shucks. Left, right, left, right, left, right, left. Down, just affecting that candle for the time frame that we're on, 5 minutes. Up, just affecting that candle. But the 1 and the 3 can turn so fast and so hard that cat is going to follow it. So now you know we're alternating between yellow and blue and yellow and blue. If you see a double yellow or a double blue, then it's because there's a hiccup in my computer processing power or my internet. But we always count cadence. It's always yellow and blue and yellow and blue and yellow and blue. Now looking at this one, I know what comes after blue. Yellow, right? But now let's see where the 2 and the 6 is. Let's see where the mouse is. We know that the yellow is in the future, wants to paint that candle whenever it comes in down or red. We know it's in the future. Can't necessarily say when right now, but we know in any 5-minute segment in the future that yellow is coming in. Now let's put the cat back in. All right. We know that we're in the influence of the green underneath the blue, because we always stagger between red and green and red and green, and we know a red is due. So if we count cadence, the yellow and the blues are first. I know we're due for a yellow, and that yellow could potentially usher in the red. Now, let's look at everything on a 10-second chart so you can count cadence. All right, forget about the body of the candle. They're so small, but I'm going to add some more body just so we can. No, that didn't even help. Let's make sure we're on auto. That's what it is. Okay. Now, current time frame is right here in about 10 seconds, and it doesn't have to be right on 10 seconds. Where are you? You're in the influence of the green, but it has to print, which means it has to shift to the left. All right, so we print it. So you're in the influence of the 2 and the 6 golden cross. What comes after blue? Yellow. So we're looking at a yellow potentially ushering in the red. If it doesn't, we'll go another blue. All right, so this is yellow. And the yellow and the red came in at the same time, right? Blue comes after blue, yellow, transparent. So we're waiting on the yellow that can bring in the red. If not, what comes after? Yellow, blue, blue, yellow, yellow, blue. You know you're waiting on blue to usher in the green. Now you're waiting on the yellow to usher in the red, because these trends are moving back and forth really fast. Let's compress it. All right, there is a red and a yellow together. Will we print? Now we're waiting on the blue. And will the blue usher in the green? It's green. It's blue and green. It's blue. All right, the blue ushers in the green. Will the green print? That's tug of war. That's a yellow and a green. The heavyweight, the cat, is a little stronger, just a little bit. Green printed. We're in an uptrend. If we don't get the red, we'll get another blue. So we're always staggering back and forth. Yellow, blue, yellow, blue, yellow, blue, yellow. And you're looking at the last trend you're in. We're looking for a yellow to bring in the red. Now we're looking for a blue to bring in the green. If it doesn't, we'll get a blue. And if it doesn't bring in the green, we'll get a yellow. Blue brought in the green. Will it print? Now we're due for a yellow. If it prints, we print it. Yellow can bring in the red. If it doesn't bring in the red, we'll get another blue. There's the red underneath the yellow. Now it flipped, so we print it. There's the red. Will it print? It may or may not print. Blue and red together. Look at that. All right, so it released at the last second. You see that? That's why you say you always have to wait till it prints. All right, what comes after blue? Yellow. Well, we didn't print, okay? It depends on how we print. Yellow, blue. We're waiting on the blue to bring in the green. We're going down. We're in the 2 and the 6 death cross. That's the trend. We're waiting on the blue. The blue and the green can come in at the same time, or it could just be a blue. If we don't get green, we'll get the yellow, but blue got to come first. Hiccup. There's the blue underneath it. The blue and the yellow at the same time. What? So they sort of canceling each other out. Now we printed blue. Didn't bring in the green. There's the yellow. Where's the next blue? It's just cadence. It's common sense. Now, we have to see how we print. We're in a trend, but the yellow might bring in the red. If not, we're due for a blue. We're still in the trend of the 2 and the 6. All right, we're going up. due for a yellow because blue, yellow. And the yellow can usher in the red because we're in the trend of the green. So we're waiting on the yellow. Now, you're learning fast on a 10-second chart. When you learn this, it's big, but we still need more information. The cat chasing the mouse. The mouse is the leader. The blue and the yellow are the leader, but it just affects the time frame of that one candle we're on. The cat, the red and the green, is chasing the mouse. All right, now, this is math. You're dealing with numbers. The price pattern is going up and down. The price pattern to the right of the chart. You should know what comes next based on how we print. If we get this blue and this green together, if we print, we know we're due for a yellow. Didn't print. There's the blue. If we print, we know we're due for a yellow. So that's weird. Okay, there's the blue. If we print with the blue, then we're due for a yellow to bring in the green. I'm sorry, the yellow to bring in the red, because you should be in the uptrend. That's blue and green together. All right, there's the yellow and the blue together. Usually you don't have that. Usually it's the yellow. So they might catch each other out. We'll see what happens. All right, so the yellow and the red came in at the same time. What's after yellow? Blue. The blue can now bring in the green. Now, it could be because the mouse can fake the cat out. The mouse fakes the cat out and you just have plain blue. If the blue don't bring in the green, we know we due for a yellow. So it's either green or yellow. There's yellow. We're in the uptrend. So the yellow could bring in the red. It's either red or blue. Nothing printed. Red or yellow, blue, yellow. Are we staggering back and forth? Blue, yellow, blue, yellow, blue, yellow, due for blue. You're in the 2 and the 6 death cross, the red. We're still due for a blue. Blue can bring in the green. If we get a blue, there's the blue and the green. Will we print? Yes. Now we're looking at a yellow. This is simple stuff. Now, the mouse is running. That's the yellow and the blue. It's really fast and it zigzags on the dime and it just affects the 10-second candle. The 2 and the 6 is chasing the mouse. It takes the cat sometimes longer to turn in order to try to catch the mouse. So the cat is painting your candles yellow or blue as it chases the mouse. So something is chasing the cat. The 9 and the 21. All right. Seeing these indicators work together can drastically work in your favor. So now I got the 1 and the 3, yellow and blue. That obviously can trigger the 2 and the 6. Do you know what comes next? What comes after yellow if we print? Red, if it ushers it in, or blue. All right, so yellow and red, there it is. So we're due for a blue. After yellow comes the blue. The blue can usher in the green. So it's either, if we print with the blue, it's either green or yellow. Let's see if the green comes in if we get the blue. Didn't get it right there. It lingers over. Blue and green together. All right, so we got the blue. The green didn't come in. It wanted to come in there. The yellow starfish pattern is trying to cancel out the green. Will the mouse catch it? All right, so we got the green. So we're staggering back and forth. Now you're waiting on the yellow to bring in the red. If you don't get the red, you got blue. There's the yellow and the red together. It's more solid, right? It's not transparent like this one is. All right, now the cat can trigger the dog. Now the dog is tracing the 2 and the 6. Now that cat is moving back and forth. It's zigzagging just like the mouse. So where the 2 and the 6 goes, it could usher in the 9 and the 21. Here's the 9 and the 21. But notice we can't put it across the top. We'll be too cluttered. So we're going to put this one right on the body of the candle itself. Expanded everything using the auto feature. Now, death cross of the 9 and the 21. Golden cross, large blue triangle of the 9 and the 21. All right. Now, usually your 2 and the 6 will try to trigger it. But if the cat is, if the mouse is zigzagging 20 times, then the cat is zigzagging like 10 times. And the 9 and the 21, the dog is zigzagging like maybe 5 times. Right? It's not as fast as the cat. The cat is not as fast as the mouse. But when you see it, it's a great thing. And notice we're staggering back and forth too. Large blue, golden cross of the 9 and the 21. Early warning system, because it's more of a heavyweight, are appreciated. It occurred on earlier time frames. The green is triggering the 9 and the 21 until it eventually comes in. But after the golden cross, the death cross tries to get triggered. There's the large yellow, the death cross. And after the death cross, the golden cross, death cross, golden cross, death cross. Did I get mixed up? Death cross, golden cross, death cross, golden cross was due, a death cross, right? Sometimes you pull out a beautiful trend, but sometimes you hear in the news, a golden cross has come in on ZBCN. Everybody jumps in. But you got to look at what the cat is doing, right? So watching the news messes a lot of people up, because in truth, if you really watch the news in the United States and you follow everything they say, everybody in the United States will be millionaires. But you always have this thing called exit liquidity. The organizations and the companies are moving first. They're making the big money. China right now saying, if you have cryptocurrency and Bitcoin and stuff, you're breaking the law. Now, China, sure enough, one day will be like, you know what? You guys can have cryptocurrency now. They just go back and forth like this all day. Population jumps in, especially they're desperate to jump in too, because cryptocurrencies in their mind typically goes up. But you don't want to be someone's exit liquidity. So this is usually big, but the forewarning is bigger. The forewarning is beautiful. Look, if you see the golden cross, especially 1 and the 3 mouse, triggering the 2 and the 6, and it follows, and you see early warning, it's like, why wouldn't you jump in that trade? Because that's usually a green candle, right? And we see we're in the trend of the 2 and the 6. Boom, 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 until it's time to get out. All right. Now, 10-second chart. The methodology is the same. Let's go to a 1 week chart. Ain't nothing changed. Let's auto adjust because the bars are bigger. Ain't nothing changed. And I know ain't a word, but I'm just saying, ain't nothing changed. You still can count cadence. We know that a blue is doing the future. Oh, that's beautiful. And the blue can usher in the green because we stagger between red and green, and red and green. So we're waiting on the blue to see if it triggers the green. Now, also, what else do you notice in the chart? There's a white line here. This is called the 21 simple moving average. But first, let's talk about what the 1 and the 3 is, the yellow and the blue, since we're on the 1 week chart. The 1 and the 3 simply means 1 week out of 3 weeks. Golden cross, Means 1 week out of the 3 weeks, the price has been moving up on average. Simple, complicated math. And in the 1 and the 3 death cross, the yellow, 1 week out of 3 weeks, the price has been moving down. And the 2 and the 6, golden cross, 2 weeks out of 6 weeks, the price has been going up, green. And the death cross, 2 weeks out of 6 weeks, the price has been going down on average. Again, sophisticated math. Calculations are always being made. And 9 into 21, what does that mean? 9 weeks out of 21 weeks. Golden cross, 9 into 21 golden cross, 9 weeks out of 21 weeks, the price has been moving up. Death cross, 9 weeks on average out of 21 weeks, the price has been moving down. But you got the white line here, 21 simple moving average. Always calculating the last 21 bars. And if you're on the white line and start closing above it, you can be in the uptrend. If you land on the white line and start closing beneath it, you could be in a downtrend. So sometimes we catching a trend. On the white line and below it could be a downtrend. Could be an uptrend. Now, those weeks are long, but let's measure a small one. Let's measure from the bottom of this red to the top of this green. Okay, let's just measure that. Bottom of the red, top of the green. 32%. 32%. All right, so let's say $10,000 in that trade. $10,000 on the weekly chart. Concept is the same on the 10-second chart. It's the very same. And especially if you're in a trend and you had bigger moves, 4 times as much. The wick means over a 7-day period, the price went up as high as, some people catch the wick, some people don't. And when it settled, it ended here, but we know it's still a green candle. All right. So the trend is beautiful because we know sooner or later this downtrend that's been occurring for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks total. Even though you do have some red and green candles in there, I can measure the green candles too. Right? Based on the time frame that you're on, I can break this one candle down, which is a 1 week candle. I can bust that down to 7 candles if I'm on the 1-day chart. I can break this candle down into 24 candles if I'm on a 12-hour chart. And I can break that down into 40, 48 if I'm on a 6-hour chart. I can break this candle down almost to infinity. There's always trades to be made. But this is the beauty of cadence. Now, the mouse has the cat chasing it. The cat has the dog chasing the trigger. The 9 and the 21 golden cross, boom, 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 boom. Death cross, 2 and the 6. All right, we know this is going to be a red candle, right? You gain all that percentage. You see yellow print. Oh my goodness, you start dropping percent. It's time to get out of there. We don't want to be too greedy. That's why they call it fear and greed. Right? You look at the technical indicators, put your emotions aside. Some people love Trump, some people hate Trump. I just look at what the guy doing and appreciate the transparency. I'm appreciating that they gave us the signals. He's always dropping breadcrumbs. You don't have someone to say something in the face of the public and then go and make some backdoor deal and screw everybody else over. You have someone who usually says and does what he says. Brilliant. Can't knock it. And everyone's following the news. And the news usually has, I don't want to call them, let's just call them the blind. The news usually has the blind followers as exit liquidity. You're somebody's exit liquidity. I don't want to be anyone's exit liquidity. I don't want anyone making money off of my emotions. All right, and everything is designed that way. Now, what is chasing the dog? The pound. The 1 and the 3, the mouse, is triggering the 2 and the 6. The cat is triggering the 9 and the 21. The dog is triggering the 50 and the 200. Now, we don't have 50 weeks out of 200 weeks, so I have to go to the day chart. You're going to see something come across the bottom of your screen. Oh, look at that. Look at that. Look at this. Now, I got to make the candles bigger again. Auto adjust. Oh, my goodness. Now you really got some information. You don't just have red and green candles. You have some information to let you know you're in the trend or not. Now, 21 simple moving average going down. Nobody likes to take a trade when the line is going down. Why? Because you get in here, turn blue, and if you don't know when to get out, that's why people sell at a loss. You sell at a loss because someone in the news told you, or because you don't know what's going on. We're baked into the cake that way. Certain things we don't talk about. We don't talk about politics, religion, and finances in the workplace. You can't tell nobody how much you made. So school is designed that way. You can't talk about these things. People get disgusted sometimes when you talk about it. You talk about politics to the wrong person, you can get into a fight. And consequently, emotionally, they may be triggered that way. But you got to look at what the movers and the shakers of the markets are saying. Love them or hate them. You got to look at what they're saying. All right. And most people don't want to talk about politics. They don't want to discuss it with family members or anything like that. It's just all a smokescreen. I'm looking at the money move because I'm not the head. I'm not the tail. I'm not the left hand. I'm not the right hand. Right? If you're the head one day, you're going to be the tail the next. If you're the right hand, one day you're going to be the left hand. I just want the information. I am a computer. My job is to take in information and make the ultimate decision based on the surgical technical information, right? Now, look at the beautiful trend. It's like confirmation, death cross, right? Let's scrunch this down. 1 and the 3, death cross, yellow, the mouse. You got the 9 and the 21 that was triggered, but it was triggered right back here with this one. The red and green started the 9 and the 21 trying to come in. That got the dog running. Now the dog is helping move the dog pound. Now, when you get that in there, what happens after a death cross of, get this, the 50 and the 200? Okay, what? It's a bigger fraction, right? The 50 and the 200, 50 days out of 200 days, the markets have been moving down on average, even though you don't see that right here. You got the dog moving left and right, and the dog pound, they driving a truck. They can't keep up unless the man get out and the man trying to catch a dog. It's not going to happen. I mean, good luck with that. You got to set them up. So the 1 and the 3 sets up the 2 and the 6, sets up the 9 and the 21, sets up the 50 and the 200. And with the early warning system, it could be big. But just because you have one doesn't mean the dog is moving slower than that. It's faster than that. And between the 9 and the 21, you can have the cat moving faster multiple times between the golden cross and the death cross. Look at this. The dog is going down, but the cat is moving zigzag multiple times. Down, up. And the mouse is moving way faster than the cat. But this right here, now, I'm going to take you on a 10-second chart. And this is why, let's auto adjust. All right. this is a beautiful thing, because what may not be a big percentage on the 1 and the 3, the yellow and the blue, or the 2 and the 6, between the red and the green. Green might print. I was looking for it, right? Green, between the red and the green. I'm going to just measure from here to here. You're on a 10-second chart, so it may not be anything, right? Bottom of the red. Be nice to have a blue. Top of the blue. Look there. 0.003 negative. All right, this is a green. All right, so we print it here. Look at that. It's a little over a 0.5% to the downside, right? So this is a learning chart. Now I'm gonna put something else on. It's gonna blow your mind. It all builds, but I have to stop right there, because this thing becomes predictable and beautiful, especially if you're trading the big mover. What do you notice here? As I compress time, the 50 and the 200 golden cross. Who cares how the cat and the dog are moving and the mouse? But when that golden cross comes in, if you get your early warning system after a death cross, you start watching the early warning system come in. Usually that can be big. It's an uptrend here, sustained uptrend. We're not just measuring this little drop that we did here. So sometimes when you're on a 1 minute chart and you're looking at the dog pound, it shows you a trend. So we love the heavier weighted moving average. And there is something heavier than this. Oh, and this is when things get really interesting, because now you can be on a fast mover chart and put a heavyweight on there, and you can really see some interesting trends. All right, decompressing time. There's some things that we got to talk about, but let's auto adjust this. And let's go to a 1 minute chart. All right. And I want to conclude it there because I lost track of time. I have no idea what time it is. I don't know if I've been talking for, I can't even remember the time. I get lost in the charts. Why? Because this is replacement income. This is being able to retire and relax. A $5,000 trade in the right place, you get to keep your $5,000 and take some profit. I mean, this is a beautiful thing. It's just a beautiful thing. Sky's the limit, right? Now, you have to trade on technical indicators. And what I showed you in review is the 1 and the 3, the yellow and the blue, triggering in cadence can usher in the red and the green, golden cross and death cross. 1 and the 3, golden cross, blue, can trigger the 2 and the 6, golden cross to green. That paints your candles from yellow to blue, indicating an upward trajectory. The 1 and the 3 death cross could trigger yellow, could trigger the 2 and the 6 death cross that paints the candles from blue to yellow, indicating a downward trajectory. And the 2 and the 6 golden cross and death cross, even though it's zigzagging back and forth rapidly, could be instrumental in triggering and bringing in the 9 and the 21 golden cross and death cross. With the early warning system, notice you're staggering in cadence between each one, left, right, left, right, left, right, left, between everything. Then you'll feel with a high level of accuracy and probability if there is a strong trend coming to the upside or the downside. I pay just as much attention when something's moving down, especially if I want to get in on the cheap, because I know sooner or later we're going to oscillate back and forth. I love the oscillations. But guess what? We need more information. We already talked about this. And so we're increasing our financial IQ of being able to jump in and out of the trade. There's a whole lot more I got to show you. It's not necessarily what asset you want to jump into, even though some assets have a real volatile system. And when they fly, I mean, they move. They move with huge percentages. And some just oscillate a little bit in a few percentage. But things become very predictable. You know if it's a good day or a good hour or a good minute segment or a good week or a good month. You already know because of cadence. All right, what else? We already went over the disclaimer. So take the time to read that to yourself again. And I need to do a part 2 and talk about some more indicators. With that said and done, I'll see you on the next episode.